Hi, welcome to the Active Value Investor channel. My name is Victor. In this video, I'm going to be analyzing Strategic Education Incorporated. This is a company that provides higher education to working people, working professionals, and provides really good education to get people ready for their careers. Let me tell you about this company that I've invested in. I like to scorecard my investments, and it involves 4 criteria followed by a decision. First, do I want to be in this industry? Is the company operated and performing well? Is debt less than 3 times EBITDA? And is the stock discounted? That 4 criteria lead me to a decision. Should I buy, hold, or sell this stock today? Strategic Education Inc. goes after working people so that it gives them a schedule that they can go with on a part-time basis and then get their higher education. They also provide education that's specific to a job and a career, which makes them quite attractive to those that really want to go part-time or have set their sights on a career like nursing. Over the last 5 years, the stock price of Strategic Education hasn't done so well. It's down 2.9%. But if you look at the 12-month chart, they've actually done quite well. They've gone up 60%, and they've bucked the trend that we saw in 2022 when we saw a lot of companies lose a lot of value. So it's a good stock to have during that time. I like to value companies based on their free cash flows that they produce and discounting all the free cash flows that I expect in the future to today's value. I'm going to start with the free cash flows that I have annualized based on the first 3 quarters of 2022 that have been reported, and then annualizing that number, I came up with 123 million that I expect for 2022. And that number I'm going to grow by 6% in years 2, 3, and 4, and then long-term growth of 2%. Nice conservative growth rate. The weighted average cost of capital that I got from Finbox is 8.8%. So based on that criteria, my model discounts all those free cash flows that we expect in the future down to $1.876 billion. But the market cap is currently trading at 2.2 billion. Therefore, the price of the stock is actually higher than the intrinsic value for this company. So I feel like I'd be paying a premium of 17% if I bought shares of STRA. One thing that is a good note on STRA is that their debt to EBITDA ratio is really low. My goal is to have it under 3, and it's well under 3. They have a great balance sheet. So summary review of STRA. Their performance has been good. Over the last 5 years, they've grown by 27%. So they're doing something right. The last quarterly reported was they showed a decline of revenue of 2.6%. And I think it's an adjustment year. I think COVID really had a lot of effect on education. So it's kind of an adjustment year. Free cash flows are good, 123 million annualized. And they've grown free cash flows over the last 5 years of 32%, which is really good. They pay a dividend of 2.63%, which they can more than afford. They also have a very high cash balance of 268 million, which is 12% of their market cap. Their total liabilities, it would be 45% of total liabilities. And they can pay off all their liabilities in 2.2 years based on the cash that they have. For 2023, education is rebounding. The CEO sees that the US, the education industry is actually strengthening. So he's bullish about 2023. The stock price is really high. I showed that run up of 60% over the last 12 months. And they're seeing increases in admissions after COVID. I think people want to get back into the classroom and get educated. My outlook is short-term growth of 6%. And I also expect that this is a fertile market. I think there could be some more surprises to the upside than to the downside in this market. I like this company because it provides some good diversification to my portfolio. I own an array of stocks. And this is the single education stock that I have in my portfolio. So I like having it for its diversification. Okay, so let's see the results of the scorecard for STRA. Is it an industry I want to be in? Yes. I like the diversification into some education. This company is very well operated and performing very well. Debt is really low. I really like the debt ratio, but I'm not getting a discount on the stock. Would I buy, hold, or sell? I'm gonna hold on this stock for now, and I'm on the edge of selling actually because the run up of 60% is great, but it leaves me a little bit exposed. I'd rather take the gain potentially and then come back and buy into STRA when either the fundamentals have changed or the stock prices come down. I'm teetering between those two. Well, thank you for watching the video. I hope you found it interesting and discovered something new about Strategic Education Incorporated. Keep in mind, I'm not recommending that you buy STRA. I just like sharing my experience as a small individual investor that's invested in this company and analyze this company to see what I'm going to do next with this stock. Thanks again for watching. Good luck investing in 2023.